I'm going to tell you why I think Bitcoin is actually a better buy than gold right now. In fact, I'm going to go so far as to say that if you hold some gold, you may want to consider rotating some into Bitcoin. Not because I think, as I said in yesterday's video, there's going to be some magical rotation from gold into Bitcoin, but I think the macro setup, which we're going to dive into today, is actually favorable, which goes against some of the commentary that you are seeing online right now. So in today's video, I want to unpack what I think is going to happen with Bitcoin, why I believe Bitcoin from this level could actually outperform gold. And at the end of the video, I'm also going to go through altcoins because I think a lot of people are bearish right now, and it's understandable, seeing metals running and seeing crypto being weak overall. But the altcoin market doesn't look, after I did a full analysis, nearly as bad as a lot of people are saying right now. And actually, there are a few outliers which are actually looking quite strong. And it's surprising because the sentiment is so bad. But when you start to peel back behind the curtain, it's showing a completely different story right now. So without further ado, let's crack straight into the video. We're back with the daily upload, so make sure you have the notification bell turned on. Remember, later in this video, we're going to be giving away some money to the people that comment Noti Gang and support these shows. So stick around if you commented on yesterday's video, and make sure to leave a comment on this video. It doesn't need to be Noti Gang, it can be anything, and check in tomorrow to see if you won. So let's go over Bitcoin just quickly because there has been a material change. Now, you have to be a bit wary because it is FOMC day, so anything could happen, and I don't really like pre-positioning prior to FOMC. That's the only reason I didn't take this reversal trade, because it was actually textbook. You see, we flipped the H4 money noodle. We also flipped the key 89K level that I spoke about as a major pivot point in yesterday's show, and now we're starting to consolidate above. This is a textbook reversal setup, but it's FOMC day, so it does make me nervous to pile into longs. And I have a rule: I never heavily position on FOMC day, and to be honest, I like to avoid trading it at all until post-announcement. Sometimes you can catch some nice scalps if there's like a big wick to the downside or upside post-announcement, but I don't tend to like to pre-position. But if this does end up being a reversal trade, what you would like to see is consolidation at least for a couple of days above this level here. Ideally, to get long, what I would look at is a bit of a deeper wick down, potentially a fake out, and then another reclaim, targeting a liquidity sweep of 91. And to be honest, this is where my take profit zone is, because I don't know if we have the velocity and the narrative yet in the market, to push up and really target this 94K level. I mean, zooming out, it is possible, right? Because technically on Bitcoin, we're still range bound. So if this is a mid-range pivot, we could look to target the highs, but not getting too excited because I do think we need to sweep liquidity from this wick up here first. But anything can happen today, just giving you a daily update on what I'm seeing on Bitcoin because there has been a material change. We have FOMC later today. Maybe by the time you're watching this video, the news will be out. I mean, I'm pretty sure rates are going to stay the same. That is what the probabilities are suggesting. Diving a little bit deeper into what is happening with the current rate situation, analysts say, and this is according to the Wall Street Journal, any rate cut before mid-year would likely require deterioration in the labor market because inflation probably won't fall fast enough to persuade skeptics before then. Over the past 18 months, there's basically been no progress on getting inflation down, said Matthew Lazzuti, chief US economist at Deutsche Bank. He expects the Fed's next cut won't come until September. Now, if you look at the probabilities for rate cuts, his prediction is slightly more on the hawkish side because there is right now a 47% chance we do see a cut in June. If this was delayed closer to September, this would obviously be a bad thing for markets, but potentially we see the cut happen sooner. Obviously, we are going to see the new Fed chair as well, and Trump continually keeps positioning and calling for further rate cuts. That's what he wants alongside a weaker US dollar, which we're going to speak about today because this is one of the big drivers behind gold, and that trade is going to be a big driver, I believe, behind the Bitcoin reversal, which we will get into. But let's actually look at what Trump said about the dollar today. For the first time today, Trump commented on the decline in USD. He said the value of the dollar is great, seemingly showing no issues with it, and that immediately sent the US dollar lower, another 1% to its lowest level, as you can see, since February 2022, and we actually broke below the prior low. So this is looking quite shaky for the US dollar right now, and this has further caused this, flight to safety, debasement trade, which has seen a lot of people piling into the gold trade. As I said yesterday, the primary reason why gold is running is purely because it's being treated like a safe haven asset. The market doesn't like some of the comments Trump is making around Venezuela. You could see here, he says a massive armada is heading to Iran, and like with Venezuela, it is ready, willing, and able to fulfill its mission. So he continually adds geopolitical shocks to the market, and it's clear that the market is pricing in this uncertainty because you have gold running like crazy. Obviously, this is also being compounded by the fact that Trump is putting pressure on the US dollar. It's clear that he wants to tolerate a weaker dollar in order to push rates lower and boost US exports, also enhancing local manufacturing in the US. So this is clearly part of his plan, but markets don't like it. And it's a combination of those factors that the market is fleeing into gold. Now, as we'll talk about later, Bitcoin isn't really acting like gold. It's not really behaving like a safe haven asset, but I want to talk about the trigger that could potentially turn that around and why I believe that will actually turn around. And in hindsight, we're going to look back on Bitcoin as a pretty decent trade versus gold from these levels. And I've got the data to back it up. Looking at the US dollar index, we're actually seeing a very similar pattern right now to what we saw during Trump's last term. So we could see the second term is highlighted in brown, and in gray, we have his first term. And you could see that prior to midterms, last time, we also saw the US dollar tanking before reversing out of midterms. It's pretty much following the exact same pattern. So I do expect continued pressure on the dollar, and also the fact that the US may actually bail out the Japanese yen situation. This could also contribute to more money printing, which, spoiler alert, is one of the reasons why I think Bitcoin is actually better positioned than many people think. We're going to get into that later in the video. But then this lower dollar should be followed by a reversal if this follows the last pattern heading out of midterms. Obviously, there's a limit, right, to how low Trump wants the dollar to go. He wants a lower dollar, but he doesn't want people to lose faith in the dollar. And if the dollar crashes too hard, too fast, it puts too much pressure on this. Remember, the president doesn't have full control over the dollar. It's much more complex than that, but there are measures that he can implement to stabilize price. So I do think at a certain point, Trump just wants this to maintain stability between, let's say, 95 and 100. He doesn't necessarily want a big crash into the 80s, which would, signal a lot of panic. And that's the other thing I'll say. Like, I don't think there's a reason to panic. Like, I am seeing a lot of this rhetoric online, and I think it's mainly from the gold bugs that the US dollar is finally collapsing. Like, let's be honest with each other. These things take years, if not decades, to play out. If there were a US dollar collapse and everyone's still denominating their portfolio in dollars, the world is still extremely reliant on the dollar. This isn't going to change anytime soon. So I wouldn't be rushing into gold, panicking that the US dollar is collapsing. This is a trend. If it is happening, that will take a long time, and it's certainly not happening yet. The US is still the biggest economy in the world, and they obviously still have a lot of power and a lot of influence globally. So that wouldn't be a narrative that I'm subscribing to in the short term. If you want to allocate, to gold or allocate to hedges in order to balance your portfolio for wealth diversification, go ahead. And that's something that I'm doing, but I wouldn't be piling into this trade, especially as it gets more and more crowded. Remember, markets are efficient. They price things in ahead of time. And I do believe for that reason, the majority of the gold upside is in. And that's why I think if you want to make money in markets, you have to look towards the next trend, because there's a reason gold has been running, and it's the fact that the market understands what is happening right now, and it's pricing in the uncertainty. In the event that the uncertainty gets priced out of the market, let's say, Trump resolves some of the geopolitical concerns, let's say markets stabilize, let's say some of the AI bubble fears, which you've, seen cropping up, start to subside a bit, and more capital pours into risk, you could see gold cool down. And that's actually what happened last year when gold consolidated for a bit, risk started running. So I think there can be another period of consolidation, which is probably going to come sooner rather than later. Gold is maintaining its place in my portfolio as like an FX hedge in the FX basket, alongside US bonds, treasuries, other currencies. But it's certainly not the same trade as Bitcoin. And in my opinion, the Bitcoin trade is set up on something entirely different, which we're going to discuss. Not the same reason why gold is running. So let's talk about that now, the gold to Bitcoin trade and how I think it's likely to play out, the math behind it, and where I think Bitcoin is actually heading and when I think it could head there. But before we get into that, I want to give away $100 to some of the Nerdy Gang winners. So Janice, you can win $100. Farley, you can win $100. Sushan, you can win $100. And HRW, you can win $100. So make sure you guys claim your giveaway in the description below with the email. I also just want to prove, because I saw some comments like, oh, are you even giving away the money? Like, we actually are. Obviously, I blurred out people's addresses for the sake of their privacy, but you can see here that we track on a spreadsheet all of the payments, and my team is executing all of these. So if you did get selected, you can actually get $100 sent to you the next day. We're actually doing this. So I'm not just LARPing, we're actually sending out the money. You can see all of the transactions here. I've just had to blur people's actual addresses out because I don't want to fully dox them, but this is the list of the winners. These are the timestamps if you want to look up the videos, and we're actually giving away 100. In some cases, we even did 200. In fact, everyone that won today, you can win 200. How about that? We'll double it today. So claim your 200, and my team can go back and verify that we doubled it. There you go. So if you do want a chance of winning in the next video where I select the winners again, make sure to comment anything you want on this video. It doesn't have to be Noti Gang, but comment and make sure notifications are turned on. I am seeing some people comment that don't have notifications turned on. If that's not the case, then you can't win the giveaway. So we will be checking. Make sure to turn notifications on and watch every video as they come out, because I'm basically like building a story throughout these videos. Like if you watch last video, that is necessary context for today's video, and so is the day before. So I'm only dropping market updates to compound so we learn together and adapt together with the market. That's why you can't just, watch one video like a week ago and then today be like, oh, but Miles, you were, short-term bearish, then now you're bullish. It's like, yeah, because the market has probably changed, and I'm giving you the updates in this video. I'm telling you when there's a flip on Bitcoin. I'm telling you when sentiment is shifting on alts. If FOMC is bad today for some reason, I'll get on tomorrow and I'll tell you why it's bad. So we have to make sure to adapt with each other, and that's why it's so important you are part of the Noti Gang and that you watch every single video. And that's why I'm bringing the daily updates back. It is more work for me, but I made a decision on the weekend that I really need to be here for you guys during this market, because everyone is like leaning really bearish, but I'm seeing so much opportunity, and we're going to get into that with the altcoins, because there is some real opportunity which me and Fabian and some of the Discord members have been capitalizing on, but it's hinting at a much bigger trend for the market. Before we get into alts, let's talk about Bitcoin. So you can clearly see that Bitcoin is underperforming gold. I mean, if you go onto the daily, you can see a bit of a reversal happening now, but overall it's been extremely choppy, whilst gold, equities, and silver have been, exploding. The metals more so than equities even over the last few weeks. Now, everyone is, wondering when Bitcoin will pump. But here's the thing about Bitcoin. Bitcoin doesn't move when you expect it. I did a tweet here saying, I think Bitcoin just randomly rips one day when people least expect it and leaves everyone sidelined. And that's typically what happens with Bitcoin. Like, it can go through periods of consolidation for weeks and weeks and weeks, or months and months and months, and then just absolutely rip. And when it rips, it doesn't really give you much time to position. You might only have a few days. So you can see this leg here where it absolutely ripped. It consolidated here, it absolutely ripped. It consolidated here, it absolutely rips. Like, when Bitcoin rips, it moves really fast. Now, obviously, if you're watching these shows, we'll be able to spot the micro shift in momentum, but the majority of the market, in my opinion, is going to be sidelined when this next run happens. But the question is, is this going to happen? And the question is, if it is, then when is it going to happen? Now, on the if side of things, is Bitcoin going to catch up to gold? I need to explain how that catch up actually happens, because I'm seeing a lot of people saying, as I said in yesterday's video, like, there's going to be some rotation from, fund managers, institutions, buyers of gold into Bitcoin. You have to understand, the marginal buyers of gold right now are the central banks. They're the institutions. They aren't as interested in buying Bitcoin. It doesn't serve their portfolios in the same way, because it isn't proven as a digital gold. And, I saw Rand's tweet yesterday. He basically says Bitcoin's narrative is entirely dependent on price. And that's 100% correct. The weakness that Bitcoin has been showing recently is one of the same reasons why it's not being thought of as digital gold. So you have this like reflexive narrative of when Bitcoin's going up, people pile into it as a digital gold, a store of value. And then when Bitcoin's going down, people start to lose belief in it. The only reason this is the case is because Bitcoin hasn't been around long enough to prove itself as digital gold. But if you think about it, gold has been proving itself for decades and decades and decades. So we're still so early in the Bitcoin life cycle to call it digital gold. But every single year that it is alive and well, and every single year that it maintains a higher floor, because this is the reality. Every single year, overall, I mean, there are years where it's down, but overall, the trend has been up for Bitcoin. If you look on a multi-year time frame, this is definitely the case, and the floors get higher and higher and higher for Bitcoin. So even if you did get a sweep to this low, for example, we're still making higher lows as time goes on. So you have the time factor where as time goes on, people believe in Bitcoin more as a store of value. And then you have the price factor. If it keeps making higher lows, you have the value inflating over time, which gives people more belief. So the belief from a micro perspective has waned. But as long as Bitcoin stays around and stays alive, the belief over time will only grow, and it becomes more defensible as an asset over time. And you have to remember, institutions are slow to act. It takes a while to convince them to add Bitcoin to their balance sheet, and some of the quantum risk that is starting to occur now, and the fact that it doesn't have that historical edge as a digital gold yet, because it's simply too new. These are deterrents for institutions to come in. So you have to understand, this is a shift that happens over time. However, gold going up is actually a very, very good thing for Bitcoin, even though it's kind of deterred market participants in the shorter term to position, because Bitcoin hasn't proven itself right now as digital gold. What it has done is pave the way in the future for when that narrative returns, and it will inevitably return, for the anchor price to be much higher. Because if you do some simple math, like I'm showing in front of you, and you look at the Bitcoin versus gold ratios in December 2024, it was a 40x. In November 2021, it was a 36x. At the current gold price, or actually for math purposes, at the price of 5,000, Bitcoin would be worth $200,000 and $184,000 respectively. That is not changing any math. That's just saying the exact same ratio that we hit just a month ago, or just in November 2021, would imply a price based on the ratio from Bitcoin versus gold of either 200,000 or 184, depending on which number you pick. And if we did hit a new high, which we eventually could in the future, by the way, because Bitcoin, in my opinion, is a lot more aligned to gold in terms of where the economy is going with AI, with energy, with the digital progression of the world. Bitcoin actually fits the bill for a lot of allocators better than gold. It's more divisible than gold. It's easier to transfer than gold. In many ways, it's engineered better than gold. The quantum risk is definitely an issue. Not going to deny that, but assuming that tail risk can be solved, then in many ways it is better than gold. And it can be solved. By the way, it's just a matter of when and how fast. Eventually it will be solved. It's just how quickly are other developers, the Bitcoin community, going to band together and act on this. But right now you're seeing the ratio in January 2025, it's a 17x. It was a 40x and a 36x in the past. I believe Bitcoin can get back to a 50x ratio. And when it does, by function of the fact that the gold market cap has gone up so much, Bitcoin will have way more catching up to do. So this isn't a play where gold investors rotate into Bitcoin. What will happen is there will be a new set of speculative buyers, either institutions that missed the gold trade or are reallocating assets, retail who missed the gold trade and are allocating, or just a risk-on frenzy in itself that can be triggered by one of the factors I'm going to mention in a minute here, which is a big macro factor not many people are paying attention to. When this move does happen, and it's likely going to be its own narrative, its own echo rally, now you will have a higher anchor compared to gold than before, which actually helps the narrative for Bitcoin. Because if an institution is allocating and the digital gold narrative comes back, they'll just be looking at the percentages and going, oh, it's only 5% of gold, or it's only X% of gold. And if it just gets to 20% of gold or 10% of gold, then it should be worth 200,000, 300,000, 400,000. So 100,000 is cheap. And that's how the narrative and momentum starts to build. And this isn't even factoring in if gold went to 6,000, 7,000, 8,000, which it definitely well could. And I think it will actually go to $6,000 to $7,000 still over the next couple of years. This only helps Bitcoin even further. So they are separate trades. The gold trade and the Bitcoin are separate trades. The Bitcoin trade is a concentration play on betting on a new asset that could eventually become a store of value. It's more speculative, but that's why it's priced at such a huge differential versus gold. And the opportunity is in the catch-up trade, not necessarily the rotation trade. But if I were holding gold right now, I would consider allocating some of those gains into an asset which can develop like ridiculously strong asymmetrical returns versus the rest of the market. I think if you're a gold bug, it's one way to take profits whilst almost hedging against your gold position, because if gold slows down for a bit, it doesn't have to move like this, but that probably implies that risk is getting a bid. And if risk gets a bid, Bitcoin is the perfect asset to actually capture that, because at the end of the day, it still is more correlated over time to equities or risk on cycles than it is to gold. So it almost operates as a hedge. So even if you weren't in gold, rotating a little bit of your portfolio into Bitcoin, I think, is the prudent move. And if I was on the sidelines right now, needing to bet between Bitcoin or gold, I'd be allocating more to Bitcoin. Now, I'm going to be the first one to put my hand up and say that I should have allocated more to gold and not to Bitcoin last year. Absolutely. In fact, I had plans to, and I didn't buy as quickly as I should have. But this is talking about the information that we have now. What would I rather bet on now at the current moment? In the past, if you got that trade wrong, that's not really relevant. And I think it's kind of sunk cost fallacy for a lot of investors. They look at what's happened in the past and then they use that to make current day decisions. But actually you have to look at the data as like a fresh set of data every time. You have to look at the objective price of gold, the objective price of Bitcoin, the current situation as a whole, how much is it priced into the market, and then make a decision where to allocate from there. And I think when you take all the data into account, it does, in my opinion, lead towards Bitcoin being a slightly better buy. Arthur Hayes put out an article today called Woomph. It's a long article. Go and read it. I've summarized it for you now, which also signals an interesting macro factor at play, which can be good for Bitcoin. He's basically talking about the fact that the US, if this yen trade continues to get messier, might step in to save it by creating more dollars, aka printing more money, expanding their treasury sheet, swapping into yen, buying JGBs, basically a stealth liquidity injection into the market. This would essentially be USD bearish, and I think it's already one of the reasons why the dollar is under pressure pressure versus JPY because the intervention involves selling more dollars, but a quick risk-off spike can happen first. What does this mean for Bitcoin? If the Fed balance sheet starts expanding, Bitcoin is the main beneficiary. This is something Hayes mentions in his article. This can be one of the triggers for what I said before, this Bitcoin candle that's going to come at any random moment, and it could come from 80K. Like Bitcoin can, go and sweep range low. I spoke about that yesterday, and then it could come from there. We don't know exactly when it's going to happen, but if this does happen, then risk assets will generally re-rate higher. Bitcoin is a liquidity sponge. It could be a boon for Bitcoin, but watch for the initial yen carry trade unwind, which could spook markets. This could, represent as one big spike to the downside before we get a big move to the upside. The next big dip on Bitcoin, by the way, if we do get one, is I'm going to be a buyer of. So I'm looking for micro shifts in the structure. I'm not positioned now because of FOMC, but I'll obviously have long-term Bitcoin, right? I'm talking in terms of short-term trading now, adding new positions. But if we got a big spike down or a confirmed breakout to the upside, I'd be an active market participant. And make sure you watch every show so you're up to date when I make this move, because when I do so, I'll probably do so with a fair chunk of size, and I don't want you to miss it. So make sure you are watching these videos as this evolves. Obviously, for gold, more money printing and a softer USD is still gold positive. But what it really depends on is whether the geopolitical sphere is still uncertain at that time. Because I think gold is running less off the anticipation, of a US yen bailout, and it's more off the fact that, the market is scared and wary right now. So I think the geopolitical situation is a lot more important for the gold trade. As I said, if that stuff subsides a little bit, I think gold by nature has a pullback / consolidation phase. So that's what I think happens in the market. Now, as I mentioned earlier, I want to discuss altcoins, and I'm going to discuss them briefly, but I want to put you in the right headspace in today's video when it comes to altcoins, because altcoins are, as you can see in front of you, weirdly okay right now. In fact, if you look at CoinGecko, you can see Hyperliquid's up 22% on the day, 63% on the week. Pump is up 29% on the week. Canton, I've talked about how this is one of my core tokenization plays. This is up 27% on the week, and some other decent tech is also up. Not huge amounts, but Zcash 9.1, ASTER 15%. The good tokens in the market are making a move. And what this signals to me is that when there are narratives, when there are strong tokens, we've seen these have been heavily oversold or heavily shorted in recent times, they can still run even with Bitcoin chopping. So it's a very interesting market because Bitcoin dominance, usually it shoots up when the market is this bearish. I can tell you right now, sentiment is really bearish, but because Bitcoin has its own headwinds, it's just been chopping. So actually the more reflexive assets in many cases have been the altcoins. And these are pretty big moves. So what I would tell you is you need to be paying attention right now. Hyperliquid, for example, it hit the lows. I actually discussed this in the Discord. I talked about the fact I was looking for a liquidity sweep in these lows. Fabian also did a post saying he was interested in Hype again and that he was buying Hyperliquid at the $17 to $20 region. So he posted it, got a great entry on that. And these were amazing entries whilst a lot of other people weren't paying attention to the market. And that's culminated, in a big push to the upside. I had a similar post on Pump. If you want to look at my Pump post, I can search it in my Discord channel, where I said the market was completely mispricing Pump because Elon isn't able to tweet at the moment, which there was all this insider trading stuff, which is why Pump dropped. And I basically was saying, look, that's FUD, and I'm actually keen on adding to my Pump positions. And if you go onto the Pump chart, you can see it's also had a big pivot off. This is actually the level here, deviation. I didn't nail the bottom here. I actually got in on the reclaim play, but it's still, up substantially. So there are still opportunities in the market for strong tokens. I think this really highlights the fact you need to be in strong tokens. So my core portfolio right now has been condensed into tokens that are strong, that I like. Hyperliquid's one of them, Pump's one of them, Canton's one of them, ASTER's one of them, Zcash is actually one of them. These are outperforming this week, and it's no surprise. These are also the coins at the start of the year when I talked about my altcoin portfolio. These were on the list because these are the strong tokens in the market that are revenue generating and are outliers from the rest of the market, which is, I guess, suffering from broader dilution. So I haven't shilled this in a while, but I do want to remind you that if you aren't in the Mars High Club, this is the place to be right now. All of my trades are posted there in real time. Fabian as well, he's been absolutely killing it. He's also talking about, I'm going to leak something, how he's adding Aero today. Very similar setup to Hyperliquid. I actually like this idea. There's been a lot of capitulation, but this is one of the top base plays. I won't scroll up and leak some of his other alpha. He's also posting TradFi picks, which have done really, really well. So we continue to expand and make the Discord better. It's still the place to be in a market like this where there is actually still opportunity, even though people for some reason don't think there is. I mean, you could see the data in front of you, there still is opportunity, and come be a part of the community if you're not already. We're very active in there, and you can ask me any question. I have a questions channel if you want guidance throughout this time. And there's lots of cool stuff coming that I'll announce on a future video. The other thing that I'm paying attention to is Ethereum. Transaction activity on Ethereum is actually up significantly, so it keeps growing. And I think this is largely off the back of the fact that fees are much lower, so it's slightly skewing the data, but it just highlights that there's still a lot of network activity in crypto. People are, and this is one of the main reasons Hyperliquid's been rallying. By the way, I still think pullbacks on Hyper for buying. It's just being a bit stingy right now, but eventually, you'll see a pullback. One of the big catalysts is like a lot of people that are trying to get exposure to the gold trade, the metals trade, the equities trade. A lot of these guys are doing so on chain. So I know a lot of it's happening on Perps, on Hyperliquid. A lot of it's happening with Tether. Tether's making a huge push into gold. I have the tweet here. Tether's become one of the largest players in the gold market. It now holds 140 tons of the shiny metal in an old nuclear bunker, and they're buying 1 to 2 tons a week. So I mean, a lot of this stuff is actually happening on chain, and this is also one of the reasons Canton on this list is running. Tokenization is just such a huge narrative. I think tokenization and privacy are massive, and they're not going anywhere. In fact, you don't need a speculative retail altcoin hype cycle for these trends to be apparent, because these aren't the people using this technology. This technology is available to anyone, and you are starting to now see that reflect in the on-chain data for Hyperliquid, for Ethereum. So Ethereum's one that I actually think could do well, because if the market, if Bitcoin did run, I think Ethereum would reprice higher as the technology bet. And it's also a little bit more quantum resistant. The network is a bit more centralized, which enables them to act faster. And obviously they have ZK and different technologies built in, which can help them prevent against quantum. So that also may be a narrative that could see ETH outperform. There are also other reasons why I think ETH could outperform. One, ETH BTC actually looks really solid at the moment. Unless this breaks down, that would be my invalidation. And two, it has slightly less overhang. Bitcoin, one of the reasons it's been limited, and I spoke about this yesterday, like we need to see this overhang getting cleared out before we can go on a big move. And that's probably going to result in, even if Bitcoin does have that big wick I spoke about, it's probably going to be met by overhead resistance. Some of those sellers need to be fully flushed out before it can really go to the upside. Ethereum doesn't have so much of that. So I still think if the market had a big risk on run at some point, ETH would be a good performer. And the invalidation is pretty clean here on the ETH BTC pair. So we can just track this. And, if that changes, we can change our thesis a little bit. So also holding a bag of ETH, willing to trade it. The only thing is it's also range bound. So we may get like a similar reclaim setup or a range low sweep or a range high breakout, open to how the trade looks. But when the time is right, I'll look at that. It's just like if you look at the daily right now, it's pressing up against the noodle. On the H4, we've had one flip, but it's just been chopping. So you don't really have momentum to trade off. Momentum oscillators and indicators are much better in a trending market, not a ranging market. So the altcoin market, to summarize, is not as bad as you think. And actually the trenches are quite alive. Like we had Penguin running, I saw this Claudebot meme running. Like there are altcoins that are running, so there are still opportunities if you're locked in. And that's why I say, look, if you're not in the Mars High Club, get in the Mars High Club. Fabian and I are extremely active with these plays, but I mean the traders also are. Like Paradise has been crushing it as well. He's actually, and I'm not just saying this, you don't need to join if you don't want, but genuinely I must highlight how great Paradise's analysis has been. He's pretty much called all the recent 3-4 moves on Bitcoin. And I just think in a market like this, where we're in such a choppy market, you really need level heads that are constantly keeping you up to date. Morin's also fantastic. He's more of a swing trader. So he's actually looking right now at a Hyperliquid short at the 38 region. So maybe look at that as a potential TP zone if you're holding Hyperliquid. You can set alerts in that area. He's also looking at a Bitcoin trade. You can see his plan here. Won't leak all of the MHC data, but I'm just showing you that we have this stuff available for you if you want to stay active and locked in during these times. On a personal note, I'm working a lot on like AI right now. You can actually see behind me, I have a Claudebot running on an old Mac Studio with a monitor there. This is like my automated AI setup that is running 24/7. It's helping me with alerts. It's helping me build and vibe code different research systems that I'm going to be using and bringing to members of MHC and also bringing to you guys on the show. So a big investment I'm making is in AI, because a lot of the edge that I have is in my head. If I'm able to give the replicatable systems I have in my head to AI, it can automate a lot of the basic things. So, alerts, basic momentum shifts, etc. Take like the organizational stress off my mind, and also take, the repeatable parts of my system off my mind. And then I can focus on my discretionary edge, which you can't train into AI. That intuition that only coming on now 7 years in the market can build you, or, the edge I have through my network or my research for specific altcoins. So AI can do all the heavy lifting on the repeatable systems, and then I can add my discretionary edge. And that, I think the people that actually learn to augment AI and trading are going to be the big winners, because the people that just rely on algos are not going to have the right discretion to optimize, and those who just rely on discretion aren't going to be pinpoint enough. They're going to be too emotional, too complacent, which have been issues with me in the past. So that's a big focus of mine. I'm sure you'll see, lots of content from me on that in the near future, because that is one way that I'm going to stack an edge. And in these videos, I'm going to continue helping you guys get an edge. I think that's probably going to be one of the things that separates my content from a lot of other YouTubers. A lot of other YouTubers, to be honest, they're just dialing it in these days. They're just focusing on the same stuff. They're, doing the same thing every day. You're going to see in my content, and maybe you already are from the updates this week, but we continue to do things to level up. We continue to look at new data. We continue to look at new ways to give you an edge. So if you're following me, I think you'll have a material, obviously I'm biased, but you'll have a material advantage over your competition in that area. So yeah, all right, I'll see you in the next one. Noti gang, switch your notifications on, comment on the video if you enjoyed it, and I'll see you later. Peace.